up because immigrants are not coming in. It should be just the opposite. If immigrants are leaving and these jobs are open, then the unemployment rate should go the other way. So that unemployment rate to me is telling me immigration is not the source of the problem. Firms are just holding off on hiring decisions. Even if their earnings are doing well. That's just what I'm saying they're doing on the labor side.
I wanted to say there's a mutual friend of ours that feels like he's missing out this morning, so he wanted to catch up with you as well.
He's out in Victor, Idaho.
He's having a good time, isn't he? Mike McKee joins us now. Good morning, Mike.
Good morning, John, and good morning, Governor Waller. I would say I'm sorry I'm not there with you, but I bet you're sorry you're not here with me. I know
you got it. I've been there before. It's a nice place.
You've made the case now a couple of times for a July rate cut, but how committed are you? Are you willing to dissent at this meeting if the majority votes the other way?
Well, I never want to commit to an action before the meeting. Otherwise, if everybody committed before, you don't even need to have the meeting to have a discussion. So the goal is to always go to the meeting, sit down, listen to all sides. People will try to convince me of their view. I'll try to convince them of my views. And in the end of the day, you make the decision on what you think is the right outcome and the right data, how the data is coming in. And right now, I laid out my case last night. I don't think I could be any more clear, I hope, as to what my position is and why I think we need to do this. It's just how I read the data and how I think about going forward, how you respond to anything that involves tariffs.
There's a lot of politics in this decision coming up, more than usual. And I'm wondering, Governor Bowman has also suggested she would prefer a rate cut in July. If two of you vote for a rate cut, if two of you were to dissent, would you worry about the market reaction to that?
You know, one of the things that...
And then actually convincingly create performances that appear as if they did them when they have...
But groupthink. All the meetings are the same. Nobody dissents. Nobody does anything. And I think this is healthy. I think this is a turning point in the way we want to think about policy. Some people don't want to cut. Some do want to cut. But coming out and making the case either side, that's good, healthy debate. Otherwise, if we're always going to do the same, the joke is, why don't you just have one person set policy and send the other 18 FOMC members home? So this is healthy. I think this is what you want to see in a democracy. You want to see policymakers have serious, open discussion about where policy should go. It doesn't mean anything about politics or anything else. It's make the economic argument and then see if you can convince others to go along with you. And that's all I'm trying to do.
We totally agree with you, for the record. We were sick of the groupthink, and it's good to have dissent.
Yeah.
Mike essentially is asking if you will dissent at the end of this month. Is there value in dissenting on the FOMC?
Well, I mean, it's often the case that you dissent if you make it very clear you think at this moment in time this is an important thing to do. If you were to go in and do kind of a jihadist, I'm going to dissent at every single meeting no matter what happens, then you don't even have to show up. Everybody knows what you're going to do. So it is important to make sure that if you dissent, you do it carefully and you have the right reasons, and it's not going to turn into a serial dissenting potential case. I mean, that's how I take my job seriously and responsibly. So I only would think about doing this. I dissented on the balance sheet slowdown earlier this year because I felt like that was not needed. And that's kind of the situation we're in now.
Chris, if you do cut, the markets will go one way. If you don't, they'll go another, perhaps. How critical is it to get to a rate cut fairly quickly? You've mentioned the danger to the labor market, but if you do wait till September, is that going to be too late?
Well, that's kind of the debate. What does it mean to wait 6 weeks? Is it that critical? And the answer is probably not. It could be, but it's also the reverse. Why wait till September if it's just 6 weeks? That's exactly the thing. It doesn't kind of matter. Just start thinking about, do I want to wait and risk something happening? This is what we saw last summer, by the way. We left July, we left rates, and then boom, we got a very weak, bad labor market report. The unemployment rate jumped 0.2. Payrolls went way down from where they were, and people were screaming at us last August, you guys should have cut in July. So 1 month it always is 1 month. Just remember that, it's just 1 month. But we live in a world in which we have to respond to real-time data to kind of sense of where the economy is going. And I've always said, if you worry about long and variable lags, which everybody always talks about, The whole point of that is to get ahead of it, not wait for it to happen, and then take a policy action that takes quarters or months down the road to actually have any impact.
The new worry is tariffs. We've just had a 6-minute conversation with you about monetary policy. You've built a case for lower interest rates and no one's talked about trade or inflation. 2 assumptions in your speech yesterday, and I think they're important assumptions. A large share of tariff increases won't be passed through to consumers. Any increase would fade over the next year or so. What data underpins that conclusion?
Well, one, it's just economic theory. So you put on a tariff, as long as it's a one-time tariff and that's it, that's a one-time price effect. I mean, this is economic theory. You could not get in any serious economic model persistent inflation from that. You would have to cook up some other amplification mechanisms, and that's what people talk about. Wages will start going up and everything will get out of control. You're not seeing that at all. This is just not. Those kind of amplification mechanisms or wage price spirals aren't happening. Tariffs are a tax, and in public finance, you learn that you may levy a tax on a firm, but who bears the incidence or the burden of that tax? It can be a group of people or one person, not necessarily the firm. So this is what I've heard from a lot of firms. If there's a 10% tax, they'll force their suppliers to eat some of that cost. Workers may eat some of that cost in terms of less hiring and things like that. The firm will take it out of their profit margins. And then lastly, some of it will get passed on. And as I mentioned last night, I've heard this for months now. Like the rule is 10%, it's roughly, rule of thumb is a third, a third, a third. Suppliers will eat a third, firms will eat a third, consumers going to eat a third of that tariff. So if you eat a third of it and it's 10%, like I've been arguing, this is like 3/10 of a, 3/10 on the inflation rate for a few months, and that's it. And it'll persist if you do 12-month over 12-month. That base effect will not go away for a while, and then it'll just drop off a cliff. So that's why I've been arguing you want to look at like 3 months and 6 months to see if these tariff effects pop up and then go away. And so that's more critical than looking at 12 months.
Yes, but the way the president is putting these tariffs on might not match up with theory, Chris. The Smoot-Hawley tax was passed and came into effect on a certain date. The president has not yet put on most of these tariffs. They're in theory still coming, and we still haven't seen the Section 232 tariffs for the most part, the national defense tariffs that he wants to put on semiconductors and pharmaceuticals, et cetera. So if the process is stretched out, consumers could be hit by an ongoing series of tariff increases, and given what they've just been through, isn't there a danger that inflation psychology starts to seep in?
Well, that's exactly the point. All my example has been is if you put the 10% uniform tariff on and keep it roughly in that range, then what I've described is what will happen. If there's constantly a sequence of higher and higher and higher tariffs, then you are going to get this rolling potential impact on prices. That's true. If it's still just a question of delaying it, that doesn't change my argument. Whether you see the spike in July or it happens in June or August or September, when it happens is irrelevant for the economics. That's a non-starter of an argument. Firms could also just spread it out in smaller increments over several months. The total effect still ends up being the same. They just get there in a later fashion, and it'll be smaller amounts. So the bigger thing is if we just continually get another wave of tariffs, another wave of tariffs, another waves of tariffs, that's when things become more problematic, thinking about what's going to happen with inflation.
You don't think the Federal Reserve should wait? I just want to talk about the experience of last year. I think Lisa's done a fantastic job of covering this over the last 6, 7, 8 months. The move we saw last year, 100 basis point reduction in interest rates on Fed funds, and then we saw a corresponding move of 100 basis points higher at the long end of the yield curve. Yields down did not happen. It was yields up and mortgage costs up as well. How do you think one informed the other? And how might that shape your approach to cutting interest rates this time around?
Well, I think last September there was a lot of, remember, the long-term rates were going down through August and early September. This was not any contradiction in what we were doing. It's just after the September meeting, the data just came back in the opposite way. Growth was up, productivity was up, employment suddenly took back off. And then you have real growth expectations being much higher. We were seeing productivity growth and GDP growth of close to 3%. So in that case, long rates go up anyway. So it's not necessarily there was some counter reaction to what we were doing. I never saw inflation expectations adjust that caused all this.
You don't think it was the market questioning your commitment to the inflation mandate?
If it would have been, you'd have seen it in inflation expectations in the market, not the Michigan thing. But we didn't see it. I mean, inflation expectations stayed fairly anchored all through this rise. So I think the increase in the long rate was just all the data was coming in for a better, stronger economy than we thought it was going to be in September. That's fine with me. You know, sometimes you're going to do these things taking a shot that I want to make sure we don't have a hard landing. And as I said, with any kind of an insurance cut, sometimes you don't need the insurance. It didn't work out. But that doesn't mean you go back and say, oh, that was a stupid decision to make.
Market-based expectations of inflation. Let's sit on this. There are clear and obvious threats to the central bank's independence right now. Every single day on this programme, we're quoting the president, calling the chairman too late, and going after lower interest rates. And I think a way that you and I can have this conversation without addressing those calls directly is to think about what's happening with inflation expectations. Do these threats threaten to de-anchor market-based inflation expectations? And is that something you and the committee might become increasingly sensitive to in the months to come?
Well, like I said, I look at after the tariffs came on, everybody was worried about de-anchoring expectations, particularly after some of these Michigan surveys came out. But when I always look at the market-based expectation because people have money in the game. Firms are making decisions on what their chief economists are saying. And if those things are wrong, they're going to lose a lot of money. So I've always paid more attention. I haven't seen much in the way of market expectations being unanchored in any ways you want to measure them, any forward. Now, in the near term, of course, they might go up because you would see inflation in the short term. But in the longer term ones, I'm not seeing it. So either the market is just dismissing all of this as chatter and noise, or at some point, if something happens such that it becomes much more serious, then you might see a discrete jump. And then, that's going to be a problem for everybody.
One of the questions that we get all the time, Chris, from people on Wall Street is, or one of the posits they make is that all this criticism of the Fed is hurting Fed credibility, and that the next chairman's going to have a tough job because there are going to be expectations for the next chairman set by the White House rather than by the economy. Do you feel that inside the building?
No, to be absolutely honest, we just do our job every day. I go in, I just focus on my work on monetary policy, payments, and oversight of the reserve banks. That's what I do. I let this stuff go and then just try to focus on my job. And I think that's how all of us are proceeding with this. I mean, at the end of the day, the president, whoever they choose, you're going to have somebody that has credibility with the markets, or you will see, as Jonathan was just talking about, you're going to see inflation expectations spike. You will not get lower interest rates. You will get higher interest rates. This is well known. We've seen this everywhere around the world when this happens. And I know Scott Bessent knows this. So this is not something that is lost on anybody.
You were nominated by this president for the seat on the board.
Yes.
You were previously director of research for Jim Bullard way back then. Is it a position you would like? Is it something you would like to do in the future?
Look, in 2019, the president contacted me and said, would you serve? And I said yes. If the president contacted me and said, I want you to serve, I would do it. But he's not contacting me.
We'll see if he does.
If he says, Chris, I want you to do the job, I'll say yes. But he's not talking to me, so that's it. It's a hypothetical
that might
isn't
change,
relevant.
sir. It's good to see you. We appreciate your time.
All right, thanks.
You've been very generous with it. Thank you very much. The Federal Reserve Governor there, Christopher Waller. Mike McKee, thanks as well to you, sir, as always. Up next on the programme, we'll get you some morning calls, plus we'll catch up with Dan Ives of Wedbush, and we'll break down this conversation we've just had around this table, the case for lower interest rates.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The headline numbers for the labor market, what we're seeing, are okay, but it's like when you get underneath and start looking at the data, the private sector is not doing as well as everybody thinks it is. If you're walking on a lake and the ice is frozen and it sounds safe, but when you start hearing cracks, and that's what I feel like, it's too late once you go through the ice.
Federal Reserve Governor Chris Waller on this program just moments ago, Lisa, making the case for lower interest rates.
Yeah, saying that you have to do it before it's too late, making the case that we've heard a lot. I mean, too late has taken on a new meaning now, of course. There is this question whether he's going to descend. It sounds like he will descend. And he really raised the point. This is actually good. You want dissent. We're at a turning point in the economy, and that's typically when you do have countering views.
Really refreshing. He talked about there should be debate amongst policymakers. There should not be this groupthink, which is something most people on Wall Street, this administration, completely agree with. When it comes to whether or not he would be the next Fed chair, he said the president has not reached out to him, but the president did reach out to him to join the board. And if he was asked to be the Fed chair, he would serve.
These 2 points that he made this morning and last night here in New York City on tariffs, and this is the key argument that he's going to have to confront the rest of the FOMC with, that a large share of tariff increases won't be passed through to consumers. And if they are, that increase will fade over time, and it's something we should look through. Point 1, on inflation. Point 2, and I think this is going to be maybe a little bit easier to get across to the rest of the committee. We can't keep going around saying the economy's solid and we have the luxury of waiting, because you've got an individual there that's saying we don't. And I think he's got some friends, he's got some company on that point on the committee.
It isn't just Mickey Bowman, it's also Mary Daly. And she said it really would not be a good thing to see the labor market deteriorate more greatly than it has already. You're also seeing Neil Dutta, you're seeing others talking about how the private payrolls just really hasn't picked up. And one thing that Governor Waller mentioned was the Beige Book. And I know that we joke about the Beige Book being really boring, but it actually is really important because what it highlights is that almost every single district shows a weakening in the labor conditions and a weakening in the belief of labor conditions going forward. And that, I think, is getting their attention.
He talked about tariffs as a tax, but he talked about how it's really divided amongst the supply chain. So that tax, when it hits a consumer, is only about a third. He said constant sequencing of tariffs, continuously ratcheting it up, not 10, 15%. That could potentially be a problem. But how difficult is it going to be when you have a Fed governor that has a tremendous amount of credibility coming on the program saying that tariffs are only a one-off increase in price levels? And then the Fed chair might come out and say, well, we can't move because we don't know the tariff rates. Well, here's an individual saying we should be moving and the tariff rates don't matter.
It's a credible argument for lower interest rates, which might find some company on the committee. And for that reason, he's going to find it easier to engineer the kind of low rates that the administration would quite like. You go with someone from outside of the building, you've got a much, much bigger problem. If this market perceived, and it is an if this market perceives them just to be a political puppet and someone without the credibility.
If they're lowering rates simply because they're doing so in response to the president, that's going to lead to inflation expectations becoming unmoored. And you'd see that in market pricing, not the University of Michigan thing, as Governor Waller said. And that seems to be what his argument was this morning.
Don't we get the University of Michigan thing later
We
this morning?
do. We get a University of Michigan thing. And actually, it's been doing better, but a lot of people dismiss it.
Sounds like Governor Waller doesn't open that one.
Up next on the programme, we'll catch up with Sarah House of Wells Fargo on the state of the consumer. Plus, we'll speak to Yahara with your morning movers and a sign that high-end shoppers are still spending. Live from New York City, this is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
60 minutes away from the opening bell, equity futures on the S&P 500 positive by 0.1%, looking to add some weight to a record-breaking rally stateside. On the Nasdaq 100, we're positive by 0.06. Let's get you some morning movers this morning. Let's cross over to Yahara. Hey, Yahara.
Hi, John. The wealthy are doing just fine. Take a look at American Express shares. They are up 1% after it beat results. It is not a huge surprise given all we've heard from economists about the bifurcation of the U.S. consumer and how the wealthy are driving the spending. And Amex is confirming that with its strong transaction volume being fueled by its most premium products. And that is significant because competition in this space is heating up with JP Morgan and Citi both leaning into that. But Amex says that it's ready with a refresh of its Platinum card coming this fall. And we turn to another company that just reported, and that is Charles Schwab. Shares are up 2.3% after beating on both the top and bottom lines, thanks to a flurry of activity in the second quarter. Though there were some weak spots, Schwab attracted $73.6 billion in total net new assets, which did come in below estimates. And we end with some breaking news. Chevron and Hess have closed their deal. We have Chevron rising 3.7%, Hess rising 7.6%. And this is after just this morning we heard that Hess won its arbitration battle with ExxonMobil, clearing the way for this deal, $53 billion takeover to move forward. John?
Yahara, thank you. Thanks for this morning. Have a good weekend. Let's turn back to the big story of the last 24 hours. One Federal Reserve Governor, Christopher Waller, continuing to build the case for a July rate cut. Mike McKee joins us now for more. Mike McKee, how convincing was the argument, and will he find some friends on the committee at the end of the month?
I definitely think he'll find friends on the committee. The question is, how much do they buy into the need to do it in July? We've heard a lot of people, including Mary Daly yesterday speaking with us, say that they are worried about the labor market and they are worried that they could be too late, but that it doesn't seem to have the urgency of a July rate cut. So Waller and perhaps Governor Bowman are going to make the case for it. We don't know how many people are going to buy that case and would vote for it. So we'll not only be watching the news of the meeting, but we'll be watching the minutes to see who spoke up and what they were saying.
Mike, also the statement. Talk to us about the statement and the kind of concessions that maybe the rest of the committee might make to some of the dubs that are emerging on the FOMC. Some of the language there at the moment that might have to change.
Well, the Fed has gotten away from very long statements, so they might try to finesse this by just noting that the labor market has shown signs of cooling. The real question is, how much of a commitment do they make to a September cut? In the past, we have seen negotiations behind the scenes that lead to the Fed not doing something what a prominent member wants them to do, but suggesting that will be on the table in the future. Do they put a rate cut in September more firmly on the future to satisfy Waller and Bowman and to try to get them to vote unanimously in July, or do they let that go by? That's going to be something that Wall Street is watching very closely on July 30th.
Mike McKee, you enjoy wherever you are and wherever you're going next. It's good to see you. Mike McKee there, following the Federal Reserve and the arguments for lower rates at the Fed later this month.
You know, I have to say, the argument for more dissent is one that resonates with me.
Oh, without a doubt.
Given the fact that it shouldn't be groupthink, number one. Number two, this is a complicated, difficult economic moment. It is one where people can have different opinions and different interpretations, and you see that across Wall Street. It might, in that statement, be a really good thing to show an active debate and how different members are thinking about it, because it gives a sense of what the scenario analysis is at the Central Bank of the United States.
And what did he call you, Mitch? What was it?
The you, Mitch thing.
That you, Mitch thing?
Yeah, not interested.
That's survey.
That you, Mitch thing comes out a little bit later this morning at 10 a.m. Eastern Time. Sarah House of Wells Fargo has this to say on the consumer. Headwinds for the consumer persist. Slower job growth and higher inflation are a recipe for weaker real income growth. Joining us now is Sarah House. Sarah, welcome to the programme. Let's get into this consumer and this labour market. What we just heard from Governor Chris Waller is that this labour market is on the edge. Do you agree? Is it on the edge?
I agree. I think it's certainly more fragile than you would expect it from if you're just looking at the top line payroll numbers and the unemployment rate. When we look underneath the surface, as Governor Waller highlighted, slower growth in private payrolls, and also just looking at the breadth of industries adding jobs has been one thing that's really stood out to me. If you look at that diffusion index, it's below 50. We've only seen that 3 times in the past 15 years outside of a recession, and one of those times was just 2 months ago. So I think there are certainly signs that the labor market is more fragile than it looks. We see this with demand continuing to weaken as well. Businesses not using employees as intensely, for example, looking at the average work week. So I think that does challenge the consumer as we move through also a potentially higher inflation period over the next few months.
One thing that John asked Governor Waller that I think is one of the key questions as we talk about the potential fragilities in the labor market is corporate America seems to be doing just fine, and the earnings are actually outperforming expectations, and you're seeing record highs. How do you square that?
Yeah, so I think part of it comes down to, we're looking at some of the biggest, most well-funded public companies, but of course a lot of job creation is by more of your mid-sized firms, of course your small businesses as well. And there I think we're seeing more struggles. So you can see this with, for example, the NFIB hiring plans and the overall index, and also just a lot of the middle market companies that, we at Wells Fargo talk to a lot, they're seeing some pressure as well. So I think it's just like we're seeing in the consumer, sometimes it's a little bit of a tale of two sizes here.
Which also raises the question of where we're going to see the investment boom that everyone keeps talking about. The beginning of a new bull market, as we heard Mike Wilson say of Morgan Stanley yesterday when he was speaking with John and Anne Marie. Just wondering at what point that creates jobs, at what point that creates inflation, at what point that creates growth that people are discounting when they talk about this fragility, these cracks.
Yeah, so I think in some ways, when we look at the productivity potential that we're seeing already, we've seen pretty strong productivity growth this cycle. Still a lot of upside when we think about some of the Gen AI enhancements, but of course that could challenge what we're seeing in terms of overall employment growth, but it's also coming at a time of slower growth in the labor supply. So it could actually potentially be a nice offset to a lot of businesses' needs, and then to the extent that this is productivity enhancing, that's actually going to be beneficial for the inflation outlook.
What's the smaller growth, though, in the labor supply? Governor Waller was just talking about the unemployment rate for college grads at 7%. That feels uncomfortably high.
Yeah, I agree. So again, this is, we're looking at slower growth in the labor supply, but that's coming largely from immigration. We've seen a very noticeable drop off in foreign-born workers in the labor force, but they're filling a lot of jobs that your college grads are not looking for. And so I think that does speak to more underlying weakness and payroll growth slowing, not just because of the supply side, but also because we're continuing to see demand weaken.
So do you think that, Sarah, it is all sufficient to say that any kind of inflationary hit from the tariffs will be temporary?
So I think that's a reasonable base case. So that's what we're looking at here at Wells Fargo. So looking for inflation to move up to a little over 3% by the end of the year, but then move back down as we move through 2026, with really the lift coming entirely from the goods sector. We're not looking for that to spill over into services, but I think understandably a lot of other Fed members remain cautious given the bout of inflation that we just went through. And I think concerns that given how high inflation has been, we're more than 4 years above target, that even just one more supply shock, even if it should be temporary, does that begin to unanchor inflation expectations? So understandably, they're a little skittish, maybe a little bit scarred from the episode that they just went through, but perhaps another few months of data showing that it's not bleeding into services, I think could be helpful and help resume rate cuts as we move into the later months of the year.
Sarah House of Wells Fargo. Sarah, thank you. Appreciate your time, as always. It's why some members are holding back still. Is 2 months of data enough to get to September and say, we're ready to go?
Yeah, how much are they scarred from their previous experience where they didn't catch up to inflation quickly enough and they said the T word? If they don't want to go back to the T word, it's a little bit worrying some to them. At this point, though, an increasing number of economists, and we keep talking about Mary Daly's interview with Mike McKee, but she also talked about this, that she also is seeing that it's more likely that it is going to be a one-time price shock, especially when met with the weakness that we keep talking about with potential cracks in the labor market.
This conversation will continue at least for the next 2 weeks and maybe the next several months. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. President Trump has been diagnosed with a chronic venous insufficiency, a common condition causing swollen ankles. The White House medical unit says that he remains in excellent health, though, with no signs of DVT, heart failure or systemic illness. Doctors attribute recent hand bruising to aspirin use and frequent handshakes, calling it benign. Elsewhere, shares of Sarepta Therapeutics are plummeting after the company said another patient has died from acute liver failure after receiving one of its gene therapies. That news follows the recent deaths of 2 teenage boys who participated in the early stage trial for the treatment. The company says it's in discussions with the FDA about resolving safety concerns. And a change in the late night lineup. The Late Show with Stephen Colbert will air its last episode in May of next year. CBS says it was a purely financial decision. The moves come days after Colbert condemned Paramount's settlement of President Donald Trump's lawsuit over a 60 Minutes story. Colbert called it, quote, a big fat bribe. And that's your Bloomberg Brief. John.
Lizzie, thank you. Have a good weekend. Up next on the programme, setting you up for the week ahead. Plus, we'll catch up with Sunil Desai of Franklin Templeton on the tension building at the Federal Reserve. From New York City, you're watching Bloomberg TV.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator, a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Two days of gains on the S&P 500. Going into the weekend looking for record highs after record highs. This morning, all-time highs, up 0.1% on the S&P 500. And so far this week, the equity market bulls getting a lot of what they want. Decent earnings from the banks. Decent data so far in the economy in the United States. And even someone who was bearish sounding very bullish. Even Mike Wilson and Morgan Stanley likes this market.
People like the idea of this investment cycle, and I really can't emphasize it enough. When I talk to people, there is an existential fear that they cannot invest enough in technology and they are going to lose their entire business if they are on the back foot. And that is the reason why it's not just the tech companies. There's a feeling that corporate America is going to withstand. Also, the consumer's holding in. I mean, people are still traveling. People are still going out to eat. I don't know. It's really expensive, except for you.
Not you.
But I, would live in a box. So there we go.
You spoke to Scott Kirby of United. I keep going back to this. What we're hearing from the airlines is so different to what we're seeing in the data, even on the airlines and airfares.
He said that it was like a switch that went on after the one big beautiful bill was passed. Also, some of the disruptions in the Middle East definitely relieved some of the pressure when you saw sort of an end to that. There's just a question here. Who's right? Is there weakness or isn't there? Are Americans just sort of conditioned to spend money and so they want to keep doing it? Is it sort of a secular trend toward travel and away from physical goods, or are things not that bad? And actually, there aren't the cracks emerging that some people are worried about.
Can I go with the second one? Number two, conditioned to spend.
I mean, yeah, and also, you got to get the Instagram. You got to get, it's all about the
They say
brand.
never bet against the American consumer.
It's true.
They just keep on spending. Check out the bond market. Bonds a bid, yields are lower. We're down 3 basis points at the front end of the curve. On a 2-year, 387. On a 10-year, down 3 to 442. A bond market rally. After this, we caught up with the Fed Governor, Christopher Waller, who's calling for a rate cut this month.
One of the things that has always bothered me since I took this job is the criticism that we are nothing but groupthink. All the meetings are the same. Nobody dissents. Nobody does anything. And I think this is healthy. I think this is a turning point in the way we want to think about policy. Some people don't want to cut. Some do want to cut. But coming out and making the case either side, that's good, healthy debate. Otherwise, if we're always going to do the same, the joke is, why don't you just have one person set policy and send the other 18 FOMC members home? So this is healthy. I think this is what you want to see in a democracy. You want to see policymakers have serious, open discussion about where policy should go. It doesn't mean anything about politics or anything else. It's make the economic argument and then see if you can convince others to go along with you.
You never know what someone's thinking, but just listening back over that, my interpretation of it was a man who was very sophisticatedly navigating a very important issue, communicating that it's not one-man rule on the FOMC at a time when a lot of pressure is building on one man.
Yes, and so on one hand, you could interpret this as giving him a pass in terms of Jay Powell making all the decisions, or you could say, well, there are other voices that can be heard at a time where people are increasingly saying his voice carries quite a bit of clout given his potential role at the Fed.
Another stealth argument he made towards the end was talking about inflation and credibility. Without credibility of the central bank being independent, inflation expectations would spike. And he said, I know that, and Scott Bessent knows that. So basically talking about the fact that whoever is going to be the Fed chair next, everyone in the White House knows that person needs to have credibility. because inflation expectations will then spike, which is exactly what this administration does not want to see.
The opening bell's about 42 minutes away as we work our way towards the weekend. Just a sneak peek of next week for you. On Tuesday, you will hear from the Fed Chair, Jay Powell, speaking at the FOMC's regulatory conference. On Wednesday, more results from Tesla and Alphabet. On Thursday, a rate decision from the ECB, and we'll get more earnings from Intel and American Airlines, plus another round of jobless claims. Let's stick with the week ahead and Fed Chair Jay Powell speaking on Tuesday as President Trump ramps up the pressure for a rate cut. Sonal Desai, Franklin Templeton writing, the FOMC is already envisioning several 50 basis points of rate cuts this year, followed by more next. I happen to disagree with the policy, but I also think this confirms that the Fed already has a dovish bias. Sonal joins us now for more. Sonal, I just want to get into your thoughts on where you stand on this rate cut debate at the moment. Why don't you think a rate cut, currently at least, is warranted?
Okay, before I get to that statement misstated what I was saying. The FOMC foresees 50 basis points of rate cuts this year and several rate cuts next year. And I think that is probably not warranted. And really, because the economy is kind of doing fine. We've talked about this several times in the past. I happen to think that the neutral Fed funds rate is between 4 and 4.25. We've talked about this before. 2.25 of inflation, 1.75 or so of productivity gains. Unless it looks like recession is imminent, it's not clear to me why the Fed should be cutting rates all the way down to close to 3% in this environment. We have become used to extremely low rates. And prior to the global financial crisis, we had decades of rates being more normalized. And that's why I don't think it's needed.
Sonal, that said, a lot of people do expect the Fed to cut to that level that you're talking about, and you're not seeing an unmoored level of inflation expectations baked into the market, as Governor Chris Waller was just saying. So do you think that the market right now is underpricing the potential for future inflation?
I think it is probably. And the point is the future inflation that I see is probably not associated, let me be clear, with tariffs. For a number of reasons, it's not just that they're one-off. Frankly, tariffs don't impact enough of
Jadi di mana kamu, Jerry? Dia di belakang pawn shop ya guys ya. Di belakang toko gadai dia. Jerry kagak pernah pakai baju, anjing. Beli narkoba bisa, beli baju nggak bisa.
So what do I use?
589减749减364 368 472 596 284 740 569 383 740 952 561 648 539 427写大案。
哎呦，
亮大案。
团队。
正确答案7283。准备。774 918减632减532 589减749减364 368 472 596 284 740 569 383 740 952 561 648 539 427写大案。
Ah, kacau.
All this is a
Guys. Tiap kali aku ke supermarket cari mie instan, otakku pasti bingung sendiri, saking banyak.
Stablecoin. It's not stable. It's not a coin. It's a money market account that under this law must pay 0% interest. So who wants to forgo a 4% rate of return and get a 0% return in stablecoin? Those who are desperate for what cryptocurrency are. Stablecoin. It's not stable. It's not a coin. It's a money market.
Sebab abang belum
The warden wants to save costs.
Gimana caranya trading kripto modal 10 juta? Jadi mungkin di luar sana teman-teman trading atau investasi gantung modal dari teman-teman. Possible buat cross ini turun apabila cross ini mengalami
nggak kuat aja mentalnya.
Mau punya rambut tebal dan kuat? Baru, inovasi terbaik dari Hairfall Expert, Dove Hair Tonic Spray.
어느 메뉴도 5,000원이 넘어가는 게 없는 이런 곳은
되게 오래됐어요. 엄청 오래됐어요. 여기.
엄청 맛집, 엄청 맛집. 이거 어떻게 찾으셨대요, 그래?
Guys. Tiap kali aku
진짜 힐링. 아우.
YouTube channel. I know that sounds like a lot. I know that sounds like a bold statement. But this, I've been thinking long and hard about this, and I really am so confident and so passionate about this decision, where I genuinely think that by making this decision with my YouTube channel, you're probably thinking, what are you even talking about? We'll get to that. For everybody that's new here, how's it going? I'm TJR, nice to meet you. For everybody that's familiar with me, what's up, man? For people who follow me on Instagram, who just happen to click on this video, what's up? For people who have never even heard my name before, who have no clue who I am, what's good? And welcome to the future of this YouTube channel. As you guys can tell by the title, this is essentially what I'm calling the blueprint to profitability. And you're probably thinking, hey, this sounds a lot like the boot camp. What's the deal? Is this, boot camp 2.0, 3.0? What's going on? That's what this video is here to explain, and hopefully I can break it down simply, and we can kind of, bond together. You guys can learn a little bit about me. You guys can see what I see in you guys. You guys can see what I see for the future of this channel. But without further ado, welcome to the Blueprint of Profitability. And let me just kind of, let's actually just get started. All these videos are going to be just raw, straight, to the point, no edits, no nothing. I think that's how it should be. Unless they're unless I literally flash the camera, there should be no edits. And unless there's copyright music going on, there shouldn't be. There should be no edits, and that's really how I want it to be done. But I guess, where do I even begin? How do I even want to approach this? Because this is such a huge decision, and this very well could just go horribly, but I'm okay with that because I genuinely think, and I'm so passionate about this project and this channel moving forward, that there's nothing stopping me from doing this, until there's just nothing else, until I just stop posting on this channel. This is it. This is my gift to YouTube, my gift to the internet. Because luckily for me, I was able to learn a skill that changed my life And now I've gotten good enough at that skill, or at least I believe I've gotten good enough at the skill, and you guys will be, you know, kind of my test dummies. Even, I don't know, the boot camp was kind of my first guinea pigs. Now we're into the real life test where we're like actually getting into this. But this is my gift to the internet, where I was lucky enough to learn a skill that changed my life forever, and I want to be able to transfer that skill from me to you, no matter how long it takes. And that's essentially what this whole series is going to be. You're going to see the same thumbnail, you're going to see the same title, but different day, different subject, forever, until I stop posting videos on this channel. There will still be Daily Bias live streams, there will still be live trade videos, there will still be market recap videos, there will still be vlogs. But other than that, these will be the only videos posted from here on out. And, you know, that sounds like a pretty bold statement. You know, you're probably thinking that doesn't make any sense. What happens if your strategy changes? It won't. And if it does, this is where it'll be shown. And the reason why I'm doing this is because over the past month, I've been thinking a lot more long term, and I've been thinking about just myself as a human long term. I've been thinking about my companies, my businesses in the long term, and I've been thinking about this channel, social media itself in the long term. And like, just to give you guys some perspective, when I finished the boot camp, and I don't even really want to mention the boot camp anymore. That was like, I don't, like, consider the boot camp fucking like 0.0 to this. This is it. When I started the boot camp, I was like, look, this is going to take you from, you know, nothing to profitable. And again, I'm sitting here saying, hey, this is what, you know, I'm going to take you guys from nothing to profitable. But this is way different. This is where you guys, whenever you guys are watching this, I'm currently recording this February 6th, 2024, just to mark this down. It's literally 21 minutes into the new day. It's 12:21 a.m., really late at night. And I'm so passionate and so excited about this project that I literally couldn't even wait until the morning to get this, like, out to you guys, or just like film this video, literally. And you're probably saying, hey, what's different from this from the boot camp? This is literally taking you guys from knowing nothing about trading. Like if you came from my Instagram and you were just like, this guy has a lot of bread, this is the start. This is the start. And there is going to be no finish until TJR is off the internet. And again, really, really bold statement. But again, the past month, I've been thinking extremely long term and thinking about,
I knew I was underwater. I just didn't realize I was this underwater.
How I want to be remembered on the internet, because if I'm being honest, I don't necessarily see myself being like an influencer or being this internet personality for like a long term. But again, thinking long term, like I don't necessarily see that as like the really long term. So while I'm still here, I feel like it's my duty to give you guys this gift, to give the internet this gift, because again, I was fortunate enough to learn a skill that not many people are able to understand and not many people are able to learn themselves. And I'm fortunate enough to understand that I'm a pretty good teacher at this skill through the boot camp itself. The boot camp, day one, gift, to give the internet this gift, because again, I was fortunate enough to learn a skill that not many people are able to understand and not many people are able to learn themselves. And I'm fortunate enough to understand that I'm a pretty good teacher at this skill through the boot camp itself. The boot camp, day one, has is my most viewed video to this day. And now if you guys are watching this, maybe like a couple months down the line, do me a favor and look at the views. How does this compare to that? And circle back to this video, as you guys keep following along with this journey, and keep checking. Because without a doubt in my mind, this video, this checkpoint, the starting line, will double, triple, quadruple, 5x, 10x what I did with the boot camp. Because the boot camp was pretty much saying like, hey, like get a understanding of the fundamentals of trading, get an understanding of ICT, smart money concepts, get an understanding of all of that before you even get into the boot camp. Which pretty much was like, was taking the entire world and saying only 0.005% of people can consume this. And that's not what I want. I want every single person in the entire world to be able to come here and for this to be their day one. And again, whether this is like a short stint for you guys, I hope that I can change your life forever. And I think I can do that even if this is a short stint with you guys, because I think there's a lot more to learn in this than just trading. And that is my goal. But my goal as well with this is to take people who want to learn trading and pretty much say, and I know, and you guys will probably laugh at me, you guys will probably say you've done this shit before, you've said this shit before, I'm not joking. I have such a clear set goal and vision in my mind for how I'm going to be remembered on the internet, and it's this. Where anybody in the entire world can come here and start on this video and follow along with my entire channel, meaning just this series, because this is all my channel is going to be. It's going to be this series, vlogs and live trades, until I'm off the internet. And anybody can start at day one and go through this till the very end. And as long as you guys just listen to what I say, follow what I tell you, and be open and not close-minded to the stuff that I tell you, without a doubt in my mind, I will be able to turn you into a profitable trader. Without a doubt in my mind. And I'm not going to lie, I used to be one of those people that sat down and was like, look, I was pretty confident that like, look, nobody's able to do this. But it's not that nobody's able to do it, it's just nobody thinks that they can do it. And again, a lot of you guys are probably sitting here thinking, I think I can do it. It's not even that, bro. It's like, it's not even knowing. It's like, just like fully embracing yourself and just throwing yourself into this, and like fully embracing yourself and just throwing yourself into this, and just give me your hand and let me guide you and let me show you a skill that changed my life. And that's all I want. All I want is just your complete cooperation, no matter how crazy the shit that I tell you is, no matter how ridiculous, no matter how much you don't believe me, and I know for a fact there's going to be people shitting on me on the internet for this, saying some bullshit. And in 5 years from now, I promise on everything, I will be having the last laugh. And I don't even want to be laughing at them because, again, this was built for them and this is built for you. And I don't know if that doesn't just go to show like how passionate and how confident I am with this decision, with my entire channel moving forward. I don't know, bro. Like, this is it. This is TJR Trades YouTube channel moving forward. There's nothing else. There's no these type 5 tips will turn you profitable. It's no more of that. It's just vlogs, it's just vlogs, daily bias, live trades, and this. And this is the highlight. This is it. So, welcome to day 1. For the people that know a bit about trading, I suggest you guys watch till the end of this video, but the next video might not be too interesting for you. Because again, I'm trying to take people who have never heard of trading in their entire life and teach them about it. And it's going to be hard, even for me, to like backtrack. It's like teaching someone how to read. It's like teaching someone a new language. Like, all of us traders, we're bilingual. We speak trading and we speak English. And people don't really understand that, because if you guys are new to trading, like, again, without a doubt in my mind, you know, this is probably like 5 years down the line. Some of you guys are probably watching this, and this is your first time ever trying to get into trading. And I want you guys to pause this video and go to like, I don't know, go to like liquidity sweeps, like explained day 3 or something on the bootcamp. Or not even that. Like go to one of my strategy videos where I say liquidity sweep, order block breaker structure, like that. And you guys will have no clue what I'm saying. But with this, down the line, and eventually, you will understand what I'm saying. And that's the goal with this. The goal with this is literally to be able to take you guys from knowing absolutely nothing in building the foundation, and then taking you guys from the foundation to step 1, and then from step 1 to step 2, and taking you guys literally all the way until both me and you have the same exact knowledge of trading, and we're learning about trading together. And that's my goal. This will probably take...
Now, all Propellerats users can advertise in Telegram mini apps. It's a new ad format that seamlessly fits Telegram's look and feel.
I want to say 2 or 3 years. And again, you guys are going to call me crazy. You guys are going to say I'm not doing it. You guys are going to say I'm not going to do it. And I want you guys to circle back. Because just like how I said, I'm closing down the Discord forever. I think that was one of the best decisions that I ever made. And I really hope that every other trader does that as well. Because if they see what I'm doing with this, they will see that I'm genuinely passionate about teaching people how to trade and doing it all for free. Where there's no money, there's no cash, like, it's not there. There's, like, this is it. This is my gift to you guys. Teaching the skill of trading for free. Where again, like, I could have charged $2.5K for the information that I gave to the bootcamp, that I gave through the bootcamp. Very well could have done that. With this, man, I don't even know how many episodes, how many hours is going to be put into this. I don't even know. This is going to be priceless. And I really hope that you guys, and don't do this on day one, because I haven't proven myself yet. I haven't proven myself to you. I haven't done shit for you guys yet. Don't go to other traders and say, why aren't you doing what TJR is doing? He's giving out everything for free, because I haven't done that yet. Go to them a year down the line and say, TJR literally took me from zero to whatever that knowledge is at that point. Why are you making me pay whatever it is a month to see your trades? If he's willing to give his skill out for free, why are you doing that? I came into this industry as like just a fucking tornado, a hurricane, ruining and disrupting everything in my path. I fucked up the space. You know, I was, at least to my understanding, like one of the first people that came in here and, you know, shows their literally like live executions day in and day out. I don't miss a fucking day. I show the truth. I show wins. I show losses. I show losing weeks. Just like, you know, times when I'm crushing it, times when I'm down horrible. Because that's what trading's about. And I'm sick and fucking tired of just like lies. Like just selling a dream. And you can say again, you can say that this is selling a dream for now. Again, quote me in a year, quote me in 2 years, quote me in 3 years, quote me in 4 years, quote me in 5 years. I will still be doing this series. I promise you. This is my promise to you. I will be doing this until this channel stops making videos, until I'm off social media. This is what my social media is going to be. Because there's no reason for the other bullshit at all. There's no reason for this 5-minute strategy. There's no reason for it. It's selling a dream. It's selling shit that's not real. It's selling bullshit. You guys said I changed the fucking game with the boot camp. I don't even think I scratched the surface. I don't even think I scratched the fucking surface. I really, really, really hope that in a year, 2 years, 3 years, that again, like even some of these people, some of these traders, like on YouTube and stuff, they're my boys. They're great people too. They're my friends. And I'm not hating on them. I'm not shitting on them. Nothing. I just think that I have a longer term vision. I know that I have a longer term vision. Because I very well could just sit here for the next 2 years. You guys ever look at your
Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
And we are moments away from the start of trading. This is Bloomberg Open Interest. I'm Shonali Basak. We are trying to keep in the green this week. We have the S&P 500 futures still riding higher, about 0.1% as we head into that market open. NASDAQ 100 also holding on, accelerating those gains heading into the open, about 0.2% higher. And there you have it, the bells. Let's take a look and see who is standing at the NASDAQ. We have FinWise Bank, and they are about to join they are joining the Russell 2000. They're celebrating that milestone, and of course that is an index that investors are watching very closely. And of course on this side we have New York City Emergency Management, Danny, ringing the opening bells at the New York Stock Exchange as investors try to end the week in the green.
Well, here's one stock that is decisively ending the week in the green, Shonali, and it is Chevron. It has won its arbitration battle with ExxonMobil and has closed its deal finally. $53 billion deal to buy Hess. It took 20 months. That's how long ago this takeover was announced, up 2.5%, 2.57% to be specific. They're going to have to work with Exxon now in Guyana. Really interesting how this moves forward. And Shonali, I'm pleased to say that the Chevron CEO, Mike Wirth, will be joining us in about half an hour's time.
Very much looking forward to that conversation. We're also keeping an eye here on Netflix. Results did beat expectations in every major metric. It raised its forecast. That was not enough, given that the stock has soared almost 50% from an April low. You're seeing Netflix shares down about 2.7% at the open. And speaking of valuations, Bank of America strategist Michael Hartnett is warning that a bubble is brewing in U.S. stocks. In his latest note, he writes that the clearest sign would be if the market ignored an increase in inflation expectations and bond yields hitting new highs. That all is as we await the latest UMich sentiment data in less than an hour. Joining us now, Lori Heinl, Global Chief Investment Officer at State Street Investment Management. What do you feel about where we are in valuations for the U.S. stock market, particularly the S&P 500, relative to where you see fixed income trading right now and any upside risk to the bond market?
Well, right now, we think that valuations, while they're extended, they're somewhat warranted given what we're seeing in terms of earnings growth. And we don't forecast yields to go much higher from where they are right now. Actually, if anything, we see short rates coming down, which will give room for a bit of a rally in bonds towards the back end of the year. So right now, we're in a bit of that sweet spot where valuations, while a little stretched on a relative basis compared to other parts of the world, look pretty attractive.
How much confidence do you have so far in this earnings season, what we've heard, Lori, from the airlines saying that more customers are going to be buying tickets to the banks with a really strong showing? Is this full steam ahead a very resilient U.S.?
Well, I'd hardly call it full steam ahead, but certainly a lot of the risks have really passed. I mean, that crisis moment in trade has passed. That's given a little buoyancy to consumer confidence. Labor markets are still pretty strong. Earnings growth is coming in pretty good. And it seems as though between the balance of how tariffs are evolving and how companies and consumers are navigating that, we're kind of getting behind what we saw in the March-April period. So we actually upgraded our forecast for the U.S., and we actually think we're accelerating it to 2026.
How do you feel about earnings season so far and what it could mean for any upside potential for the broader index? Do you feel that it's what's been working well that will keep working well, or do you see any undervalued opportunities to push these indexes higher?
Well, there are a couple of things. First and foremost, it is still going to be very idiosyncratic. So we're starting to see some of the areas like you described,